Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you for joining us on our breakfast meeting this morning and welcome you back from the weekend. It is Monday, the 13th of September, 2021. As always, our meeting is being recorded and the audio file may be shared with third parties. The meeting is also being streamed live on our Vetiva online page on Facebook and is set to last for 30 minutes. On our agenda today, we will get a rundown of the capital market environment in Ghana from our partners at IC Securities with Johnson and Daniel. After this, we'll move on to Simbiat from our Global Equities Desk for a rundown of Friday's activities. Following this, we'll move to Omorige, who will cover fixed income and currencies. And then we will conclude with Boston from Frontier Africa Reports and their updates. Without further ado, we will now start off with Daniel from IC Securities. Good morning, Daniel.
Good morning, Jose, and good morning to everyone on this call. I'll first start off with the Treasury bill space. Government of Ghana fell short of its target at last Friday's regular auction for 91 and 182-day bills. It raised approximately 1.25 billion Ghana cedis, representing 91% of the target amount, which was 1.38 billion Ghana cedis. Yields for both tenors remained relatively stable from the previous session at 12.45% for 91-day bills and 13.21% for 182-day bills. We attribute the low participation to Thursday's Treasury bond auction, which mopped up liquidity. On the local currency bond market, the bond secondary market saw less activities across last week, especially ahead of Thursday's 6-year Treasury auction. Monday and Tuesday were relatively quiet as local asset managers sat on the sidelines awaiting for the initial pricing guidance, which came in at 18.6% area on Wednesday. The 6-year auction saw a fair participation as government raised approximately 1.24 billion Ghana cedis at a final price guidance of 18.8%. Few volumes of 2024 maturities concluded on the day around 17.4% levels. We tipped the market to see momentum this week. And finally, in the Eurobond space, trading activity last week dipped on the back of sentiments around decelerating global growth due to the pandemic, as well as relatively low vaccination rates in the US. Despite that, the long end of the Ghana curve, especially 2042 maturities, saw some two-way flows across the week, gaining around 50 to 70 basis points on average. We expect sub-Saharan African bonds to reverse losses this week, supported by high crude prices. That's all for fixed income. Thank you.
Thank you, Daniel.
Hello, good morning, and welcome to another week. On the stock market, the Ghana Stock Exchange Composite Index closed last week session on another positive note with the year-to-date return of 44.23%, which is up by 1.7% on a week-on-week basis. The increase was supported by 8 advances across the various baskets on the best. Ecobank Ghana led the pack of gainers, recording 46 pesos increase to 7 cedis 80 pesos, which was driven mainly by local institutional demand. Other stocks like Total Ghana, FML, BOB, Enterprise Ghana, Societe Generale, and Goel all extended their gains, breaching their year highs. MTN Ghana recovered grounds as telco giants closed last week's session at 1.26 cedis 26 pesos, up by 2 pesos following demand pressures from foreign institutional demand. Markets turnover improved by 72% to 5.8 million Ghana cedis, with MTN Ghana accounting for about 93% of the traded value. For the week ahead, we anticipate demand for the telco and consumer baskets to be sustained with a chance of markets closing higher. However, given the absence of fundamental support for Unilever's recent rally, we are of the view that the stock is tipped to lose some pesos from profit-taking activities. Thank you and have a wonderful day.
Thank you, Johnson. We will now move to Simbiat with Global Equities. Good morning, Simbiat.
Good morning, Dozie, and good morning to everyone. I'll be doing a quick rundown of the BRVM and the Nigerian equities markets. And starting with BRVM, it closed the week positive. I saw composite index gain 16 basis points, with week-to-date gain of 0.78% and overall year-to-date return at 22.34%. Friday's session saw solid brown close on the Guinness chart with a 7.5% price appreciation after seeing 8 straight sessions of negative close, followed closely by Bernabe, Siko, and South Cordova. Some of the indices that closed the week positive were the BRVM 10 index, BRVM agricultural index, and most significantly was the financial services index with a 2.05% return, which was largely on the back of the 26.5% gain in Asai Bank Cote d'Ivoire. Friday's activity level improved significantly in comparison with previous days' data, where volume and turnover improved by over 100%. Going into the new week, we expect market to trade mix following the uptrend last week as some investors start to take profit in names that have seen some form of price appreciation. Over in Nigeria, last week's equities trading started and ended in the red zone with bearish close in between. So on Friday, the All-Share Index closed down by 71 basis points. Week-to-date return declined by 86 basis points, and the overall year-to-date loss for the market at 3.35%. Ensuring the negative close on Friday was the 84 basis point dip in the banking space on the back of losses in counters like ETI, UBA, Access, and GTCO. While we also saw a large cap name, that's Intel, shed 4.64% to close at 715 naira. Sorry. Speaking on the last week's sectoral performance, so despite the bearish run, the consumer goods and the oil and gas indices were able to finish the week positive, with oil and gas sector having the most significant gain of 2.28%. On the back of the decent price appreciation we saw in Oando. The stock gained 14%, about 14% last week. On the other hand, activity levels traded down with volume declining about 55%, while turnover fell by 32%, with market breadth contracting further. Going into today, going into the new week, following the successive negative close last week, where on Friday we saw investors starting to take position in some fundamentally sound names with lower entry points due to the downward trend. While some profit-taking activities persisted, we expect this to filter into today's trading session with the possibility of market trading mixed. And on the final note, Fidelity Bank released its half-year results, where gross earnings grew by 6.2% year-on-year, and profit after tax jumped 70% to 19.3 billion. No dividend was announced in the period. Also, the stock closed 1.29% down on Friday at 2 naira 30 kobo, representing 8.73% loss year to date. So we'll see how the market reacts to this news in today's trading session. Thank you, and that'll be all from my end.
Thank you, Simbiot. We will now move to Amorige for fixed income and currencies. Good morning, Amorige.
Good morning. Good morning.
Hello, Amorige, there seems to be an issue with your network. We can't hear you clearly.
Okay, thank you. It appears he's having network challenges, so I will just take the brief for this morning. We saw the parallel market, the Naira depreciated to 545 Naira to a dollar by about another 5 Naira on Friday. We have continued to witness the Naira weakening at the parallel market from Wednesday there about last week. Our view is that this will likely continue in the short term and to moderate hopefully as September ends. We believe one of the factors will continue to be the general concern around where the Naira is heading to within the populace, and also September appears to be a resumption time for schools abroad, and so that might mount a subtle bit of additional pressure, which can easily spark people starting to speculate and hoard again, and that we believe is what we've seen. We also believe that CBN at the next MPC, which is 15th and 16th, would also address some of these concerns. Our opinion is generally that there will be a way that we have to find a way to drive supply back into that space, especially as reserves have been showing signs of growth in the last couple of weeks. Reserves grew by another $600 million within the last week to $34.1 billion from $33.6 billion closed on the previous week. For the ironing window, we saw rates just trade between 400 and 413 also on Friday, and that was generally the range where we saw trades last week for the ironing window. At the OB and overnight space, there was not so much pressure on funding for Friday. Market had funded for NTB debits as of Thursday, so we still saw rates just around the 9 to 12% handle. Generally, the market still remained bearish. For the NTB space, we continue to see trades around 7 and 7.15 levels as players become very cautious as to where they hold these papers. You'd recall that we had seen a shift from 6.8 at the auction before the last to 7.2 at the last auction, which continues to show that the government intends to borrow strongly, and nobody is clear as to how market or what the DMO will do at the upcoming auctions, both for treasury bills and bonds. Pretty much, we saw the bearish action dovetail even into the bond space, which had also been bearish from about Wednesday following the results. We saw the 2050s trade still range trade between 13.07 and 13.12 as at Friday. We saw some cherry picking from players. We had been generally around 12.8, 12.7, the lows of 12.65 within the last 1 to 2 weeks on the longest end of the bond yield curve. So seeing 13.05, 13.1 levels was a good place for some players to cherry pick. However, the demand was very muted, very small and far between. So the bears still remained the major owners of market as at Friday. We also saw the CBN coming to conduct an normal auction last week again, offering 50 billion and selling at 7.1, 8.5, and 10.1 across all tenors, pretty much keeping things the same. For the Eurobond space, we continue to see interest. Stronger oil prices remain continue to provide support in that space as well. Today, we're seeing oil prices somewhere around $73 for Brent, and the buy side action on Brent is largely as a result of signs of supply tightening in the US following the hurricane. We believe this will continue to drive interest in euro bonds in the near term. Whilst we saw buy side interest on Nigeria, again, stronger oil prices, increasing reserves, and also the plan by Nigeria to come and tap the market in October continues to drive support for Nigeria papers. Whilst across other environments in Ghana, the sentiment was mixed. We saw a bit of buy side and also a bit of sell side on Ghana assets as at Friday. Overall, the Eurobonds market remains mixed, and we believe oil price performance will continue to drive action in that space going forward. Going into today, we see mixed reaction as well. We see buy side interest again in Nigerian papers, and we'll continue to also observe reaction across other bosses, but we believe overall the market will be buy side inclined. For the local markets, we expect market will remain bearish, especially in the bond space, as players continue to offload their holdings pretty much so as not to be caught unawares. There's MPC this week, as I earlier noted, and typically when the direction is not clear, in some instances, players just want to stay lean. And if you recall as well, at the last bond auction, the 2050 paper was largely oversold, so there's so much supply and people are just looking to exit. So we see the long end continue to range trade between 13 and 13.2% at the worst case for now, and we'll continue to monitor accordingly. For the NTB space, we also see market maintaining between 7 and 7.15 until things cool off and DMO provides some clarity as to direction. But it appears the signal is clear. The bond auction next week will just tend to provide some solidification to what we are seeing currently in the market. Pretty much also the MPC this week will also provide some clarity, although we see at this time that the committee will most likely maintain all stances and continue to watch how the impact of last decisions continue to filter into the economy. I believe there'll be some, pronouncements as to how to attend to the dollar situation at the parallel market. I believe that covers it for fixed income this morning. Thank you.
Thank you, Dapo. We will now move to Justina from Frontier Africa Reports and their updates. You may now speak, Justina.
Good morning, everyone. We're starting here from the East African region, where last week at the Treasury Bills auction, the Central Bank of Kenya accepted bids worth 17.4 billion Kenyan shillings, representing a performance rate of 72.7%. While in Rwanda Air says it will expand its footprint in Democratic Republic of Congo this month from September 29th. In Uganda, the Communications Commission has given AfriCell Uganda a set of tough rules, tough exit conditions before it winds up operations on October 7th, one of which is to pay all outstanding debts before it goes out of operations. In Southern Africa, S&P Ratings estimates that globally, corporate capital expenditure or CAPEX will jump by 13% this year, with growth in all regions and broad sectors. While Steinhoff has gotten votes to finalize its settlement proposal, the settlement, which has been years in making, has received enough approval from all claimants who lost money in the collapse. First Rand Bank Namibia recorded a profit of 1.03 billion Namibian dollars for the year ended 30th June 2021, an increase of nearly 24% compared to the previous financial year. While in North Africa, Africa Finance Corporation has finally officially welcomed Egypt as its current member state, becoming the 32nd member of the AFC. The European Bank for Construction and Development, that's EBRD, is set to provide the National Bank of Kuwait, Egypt, with a loan worth $25 million to boost the efficiency of renewable energy in Egypt. While in Tunisia, BH Bank has secured the approval of the Financial Market Council to issue its subordinate bond loan of 50 million dinars. Subscriptions will open September 20th. And in West Africa here, that was last week, the NGX says it has placed full suspension of trading in the shares of AXA Mansard till some regulations have been put in place. While CBN also said that it has no plans to convert domiciliary account holdings into Naira, and has also warned banks to stop FX malpractices. These are the stories we got from CBN during the weekend. And in DRC, the Congo says it's preparing its budget worth $10.3 billion for the year 2022. And that's all from us here in Frontier Africa Reports. Thank you for listening.
Thank you, Justina. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will give you an opportunity to ask your question. Or you may use the Q&A box and we will respond to your question. We already have a question and it's to Dapo. The question is, you will agree with me that once the parallel market rate goes up, it hardly retreats, as we've seen in recent years, thanks partly to speculations. Do you see the dollar Naira exchange rate moving to 600 Naira by year end?
Okay, thank you for the question. And, I like the qualifiers, saying hardly and, not impossible. And we've had one instance. I think the first time we moved to the 500 mark, we had a retreat back to about 360 or thereabouts, if I recall correctly. So yes, it hardly does. I totally agree. And coming to 545, we have tested the 530 resistance, and it appears the next resistance to test will be 600 mark clearly. But I don't see regulators sitting and folding their hands to let it slide that much. I mean, you'd agree also that a reversal of the ban on sales to BDCs, for example, would also start to mean speculators would also come out in the opposite direction and try to offload some of their holdings. But I quite agree that yes, it hardly retreats, and 600 most likely is the new resistance we'll be testing in the near term. But I believe strongly that the CBN and the government will generally want to do something to arrest the situation. And coming from the fact that elections is in a couple of years, and we can even start tracking it as months away. So you would want to think that the government will want to do something drastic to have some campaign winning point, if you permit me. So again, yes, 600 is the resistance will most likely be tested in the next couple of weeks or months. But then again, I believe strongly that something will be done to find a way to moderate things. Clearly, the bank approach isn't working. And again, at some point, the CBN had also banned BDCs a couple of years back by not selling to them, to clarify. But somewhere along the line, they reversed that stance and started selling to them again. So it's become clear that they are crucial, and it's a necessary evil. We just have to find a workaround. I think things will be done in that regard, and hands folded, maybe at this MPC something comes up, or maybe potentially afterwards. But I think something will be done to stem this tide. If not, we'll just continue to slide. That's the opinion currently. If anything changes, we'll definitely provide feedback. Thank you.
Thank you, Dapo. We still have time for questions, so you may send them in using the Q&A box, or you may raise your hand and we'll give you an opportunity to speak. Thank you. I see that we have no further questions today. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we thank everyone for joining us this morning. We continue to encourage everyone to keep safe And we look forward to having you join us again tomorrow morning at 8:30. Good morning.